Hello folks, welcome back to my YouTube channel. This video is going to be on how to identify your daily bias and how to trade your daily bias. Please subscribe to the YouTube channel as I'll be making subsequent videos on the different ways that you can identify your daily bias. So this is just going to be a one way that you can identify it. There are several ways that you can do that. And in this video, I'm just going to talk about this particular one way that I identify my bias today to catch this beautiful trade on euro dollar. Okay, so subscribe and turn the notification on and like and comment. It helps the YouTube algorithm to introduce this video to other YouTube viewers. Okay, so let's go into this. We have to identify which higher time frame PDRA that price has traded to. Okay, so you're gonna be checking your daily chart or the weekly chart to see if price has traded into any higher time frame bullish order block, breaker block, fair value gap. So in this particular trade, I will show you on the daily very soon. We had traded into a daily bullish order block. Okay, get rid of this. On the 31st, we traded into this daily bullish order block. I will show you very soon, but let's go through the steps. After identifying which higher time frame PDRA we have traded to, we have to identify if there is any clear liquidity pool existing above the current PDRA for a bullish scenario, or do we have any clear okay, this should be here, or do you have any clear, let me quickly dig this one. Okay, determine. Okay, quickly dig this one. Okay, good. So you have to identify any clear liquidity pool that is existing above the current PDRA that price has traded to for a bullish scenario. Then for a bearish scenario, you have to determine any clear liquidity pool existing below the PDRA that price has traded to. So after that, you're going to mark or identify your order flow on the 1 hour chart to see if the order flow supports your daily bias. It's very important. Okay, and then when it comes to your entry, you have to consider time, either the London Q zone or the New York Q zone for your entry. Okay, so let's go through this trade starting from the daily and then going through this price list. You can see that all this list was checked 100%. Let's go to the daily chart and you can see that on the daily chart, what do you see? You can see that we've traded into this bullish order block on the daily, and then the daily is bullish, right? The daily itself is on a bullish order flow. We've traded into a daily bullish order block, and this was 31st January, and then price showed willingness to go higher by rejecting. They see that the daily candle of 31st rejected. It left this long tail behind. So to me, after this closure, I realized that price was showing willingness to expand higher. Okay, so if it was going to expand higher, what are the clear liquidity pools existing above market price? So let's go to the left side of the chart, and you can see that we have a clear liquidity pool here. You see these equal highs. So you see that I've denominated that equal highs on the daily. We also have this CB, sell side imbalance, buy side inefficient. Okay, you can see that only sellers were granted an opportunity in this zone. So normally the algorithm will reprice back into this zone to offer buy side delivery. Okay, so this was a draw on liquidity, as well as this equal highs, a draw on liquidity. So aside this external liquidity pools, I also had this internal liquidity pools, and this was Monday's high, and then this was Thursday's high. This way, internal liquidity pools that I wanted to see price traded to, because anybody who was short from this level either has trailed his or her stop loss to this point, and then the stubborn ones are still keeping their stop losses here. So to me, this was a liquidity pool untapped, as well as this high liquidity pool untapped, as well as the external liquidity pool, which is the equal highs, and then this CB. Okay, so these liquidity pools were very clear. Okay, so I thought that we may expand on the 1st February, which is today, to some of these liquidity pools. So the next step is to determine your order flow on the 1 hour. So let's see the 1 hour if the order flow supported my bullish bias. Okay, so on 1 hour, okay, so this was the 31st candle that traded to the bullish order block, and you can see that on the 1 hour, price had begun to make a bullish order flow. Okay, you can see that we were bearish at this point, lower lows, and at this point we broke or shifted market structure above this high. Okay, and then we started making some bullish order flow on the 1 hour. Okay, so we started trading the 1st February from here. 1st February, right? Midnight open 12 right here. So I wanted to see some more price action. So I didn't take any entries during the landing kill zone, which is from 2 a.m. to 5 a.m. And then for it to be easier for you in setting your kill zones, your time zone should be set to UTC -5. Okay, UTC -5 New York, so that you can easily know your New York time without spending any effort in converting to your local time. So your chart can be set to New York time. 2 to 5 is your landing kill zone. 7 to 10 is your New York kill zone. So landing kill zone, I didn't take any entry. Remember that the last step is to time your entries with what? Remember. Okay. The last step, consider time and price for entries. Okay. So either landing kill zone or New York kill zone. So during landing, I didn't take any entries. I demanded more price action. So I was timing my entries from the New York kill zone. So let me go to the 15 minutes chart. And on the 15 minutes chart, these are my clear liquidity pools. Let me get rid of this first. On the 15 minutes chart, during New York kill zone, which is from 7, so 7, okay, 7 right here, 7 to 10. Okay, 7 to 10. So this is the New York kill zone, right? So let me get rid of these lines again. So as soon as New York opened, what did New York do? Remember, whenever you anticipate a significant price run, you should anticipate some liquidity run. Okay, so you can see that we had this low. Let me get rid of this. We had this low and then this low, okay, which was a liquidity pool, or some low. These lows were left untapped, and you can see that as soon as we started trading from the 7 o'clock candle right here, we came down to wipe this sell side liquidity, and then we shifted market structure above this high. Okay, and this was happening in New York kill zone. So I have my liquidity run in New York kill zone. Since I'm bullish, I'm not considering this as a shift in market structure. I'm considering this as a liquidity run, a purge and a revert, right? So you quickly pair these lows and reverted, broke or shifted market structure above this high, and see what market or price left behind. Price left behind this buy side inefficiency buy side imbalance, sell side inefficiency, as well as this other block. Okay, and then this other block, the main threshold of this other block being this as well. This other block, the main threshold, that's the 50% being this level. So after shifting market structure above this, I was interested in this area, the BC or the fair value gap. I also was interested in the opening of this bullish order block, and then the main threshold of this bullish order block. So when price came here, I was looking at my news calendar and I realized that there was a high impact news right at 10 a.m. So instead of taking my entry at the CE, that's the middle point or the 50% of the fair value gap, I waited for this news, okay, to come out to see the damage that it will cause. So the news release spiked price through this fair value gap, the BC, down to the OB, to the main threshold, all the way down to this wicks, the CE of this wicks as well, okay, which was a very good confirmation, because after the spike down, we rejected all the way up. So look at the body respected the low of the BC as well as the open and then the main threshold of the other block. So I really like this rejection. So as the next candle opened and traded back into the fair value gap, I took my entry right from here, the OB, to my entry right from the other block here. My stop loss was just below the other block. Stop loss was just below this other block, and it was just a 9 pip stop loss, just a 9 pip stop loss. And my first target was this high, and that's Monday's high. And then my second target was this level, but I saw that when price got here, it was stalling a little bit, not showing willingness to expand aggressively higher. So I took more partials here, and then I left the remaining lots to run up to the equal highs on the daily. Okay, at that time I had taken around 70% of my positions off, so I was very comfortable, and with the rest I maintained my stop loss down here. And then today we had FOMC, so I just left the little lot size to see what FOMC would do. And you can see that FOMC spiked all the way back to the OB and to this fair value gap and rejected aggressively, expanding aggressively all the way up to the equal highs on the daily, as well as the CB on the daily. Okay, the sell side imbalance, buy side inefficient, price action on the daily. Let me quickly show it again. Okay, and those were my clear liquidity pools. Okay, see the CB and then the daily equal highs. Those were my clear liquidity pools. So you can see that all this list, everything on the list was checked. We had traded into a higher time frame bullish order block. We had a clear liquidity pool above price, which are this equal high, the CB, Monday's high, Thursday's high. And then my order flow on the 1 hour was bullish, which supported my bullish idea. And on the 15 minutes, I timed my entry during the New York Q zone. Okay, and on the New York Q zone, as ICT has been teaching, whenever you anticipate a significant price run, you anticipate a run on stops. So we had a beautiful run on this short-term lows during the New York Q zone. Okay, this short-term lows. Okay, this short-term lows. So side liquidity, we had a beautiful run on it and shifted market structure above that high, and that was a confirmation in our Q zone for bullish price. Price left behind this fair value gap and this other block, and then boom, that was your entry to target this buy side liquidity pools. So this is just one way that you can determine your daily bias I have two other ways that I determine my daily bias. So it's important that you subscribe and turn post notification on. Let me quickly show you my execution. So this was my entry. Boom. This was my entry. Okay. It was very beautiful entry, and that was my first partial right here. I took some partials off here as well, and then I left something all the way up. I as well shared this entry on my free Telegram community, so you can as well join this community. This was the entry that I shared with the community, so I'll leave a link on the in the description box to this Telegram community for you to join us. So thank you. Like and comment on this video. It helps the YouTube algorithm to introduce the video to other viewers. Thank you very much.